If you could borrow one mind to build wealth faster, borrow Charlie Munger's. Not for stock tips, for how he thinks. Munger's edge wasn't guessing better. It was thinking better with mental models. Simple mental tools that help you stay calm, logical, and consistent when money tries to get emotional. Use them, and your financial life stops feeling random. It starts feeling inevitable. Why this matters? Most people don't stay broke because they're lazy. They stay broke because they're missing a system. They hustle, then make one avoidable mistake. An upgrade that becomes a burden. A flashy loan. A stock they didn't understand. That one move resets years of progress. Mental models are armor against those resets. They don't make you perfect. They help you avoid the preventable. They turn, "I hope this works," into, "I know why this works." The inner game, mindset models. 1. Inversion. Most goals are forward-facing. How do I get rich? Munger flipped the question, how do I avoid staying poor? All I want to know is where I'm going to die, so I'll never go there. Charlie Munger. List what guarantees struggle. Chasing status. Taking on high-interest debt. Selling in fear. Buying what you don't understand. Now design your week to avoid those. You just eliminated half your risk without earning another dollar. 2. Circle of competence. Your brain is a spotlight. Spread it everywhere and nothing's clear. Stick to what you understand. Industries, skills, strategies. If you can't explain it to a smart teenager, pass. Saying, "I don't know" is not weakness. It's how you preserve capital for what you do know. 3. Base rates over vibes. The world trains us to react to noise. Mental clarity starts with context. What's the long-term return of a global index fund? How often do startups in your industry fail? What's the real cost to maintain a property? Base rates calm you when headlines scream. They also prevent delusion when your ego whispers. 4. Second-order thinking. A raise feels like more room to spend. But ask, and then what? That new car payment? It locks in a fixed cost for years at the expense of ownership. The thrill fades. The payment stays. Always follow your decisions to the second ripple. 5. Redundancy. Redundancy isn't laziness. It's wisdom. Keep cash buffers. Keep a side skill. Keep separation between your life and your portfolio. You don't get extra points for dancing on the edge. You get to keep going. 6. Checklist discipline. Under stress, the brain fails. Pilots use checklists for a reason. You should too. Write a checklist for big decisions. Buy, sell, borrow, upgrade. Make it boring. Let your results be exciting. The outer game, money models. 7. Opportunity cost. Every dollar lives two lives. The one you spend and the one it could have lived. That $300 per month in lifestyle creep? At a 7% return, it's quietly costing you over $74,000 in 10 years. Double that in 15. See the hidden cost, and your choices will change. 8. Incentives. Show me the incentive, and I'll show you the outcome. Charlie Munger. Before you sign anything, ask, who gets paid? When? For what? Salespeople are paid on speed and size. Funds are paid even when you lose. Incentives explain the pushy tone, the urgency, the perfect fit. If you wouldn't design that system for yourself, walk away. 9. Margin of safety. You will be wrong, so plan for it. Buy houses you can afford even with rate bumps. Pick funds that don't need to outperform to break even. Avoid debt ratios that only work in perfect conditions. Margin of safety means staying in the game, even when the game turns. 10. Mr. Market. Markets have moods. Don't trade with them, trade around them. If prices drop but business quality holds, you're looking at a discount. If prices soar past fundamentals, trim, don't chase. Mr. Market is not your friend. He's your servant when you learn how to ignore him. 11. The waiting room. Patience isn't passive. It's a strategy. 48-hour pause on big purchases. 30-day watch list before new investments. 2 review dates per year for your financial plan. Boredom builds wealth. Install boredom on purpose. 12. Position sizing. Think like a long-term poker player. Bet small when uncertainty is high. Bet slightly more when quality and price align. Never bet so big you can't sleep at night. Consistency beats courage you can't hold. Practical application. Let's bring this to life. Scenario 1. The hot stock post. You see a post hyping a new company. Invert. What would make me regret this? Circle. Do I understand the business? Base rate. How often do trending stocks beat the index over 10 years? You put it on your 30-day watch list. No FOMO. No mistake. Scenario 2. The apartment upgrade. A nicer apartment tempts you. $380 more per month. Second order. That's 6 figures lost to compounding. Incentives. The agent earns more when you move faster. You slow down. Ask to see something smaller with sunlight. Peace stays intact. Scenario 3. The market dip. Your index fund is down 18%. Margin. Your buffer is strong. Sizing. Your exposure is within limits. Waiting. No need to react. You rebalance once. Then get on with your day. The one-page system. Front. Mindset models. Invert. List 3 behaviors that would sabotage your freedom. Circle. List 3 domains you understand and 2 you don't. Base rates. No average returns, risk ranges, timelines. Q. Add, and then what, to your screen. Back. Money models. Incentives. Ask who gets paid, when, and for what. Margin of safety. Set fixed cost caps, buffers, minimums. Sizing. Default amount per new idea, max position, when to trim. Waiting. 48-hour gate. 30-day watch list. 2 annual reviews. Take a photo. Read it every Sunday for 4 weeks. Reflexes will change. A final thought. It's remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent. Charlie Munger. Let others chase brilliance. You chase fewer mistakes. Your 60-second action creed. Invert before you act. Stay inside your circle. Trust base rates. Ask second-order questions. Align with fair incentives. Demand a margin of safety. Size for sleep. Wait on purpose. Let the lattice work do the work. If this helped turn the noise down and light up the path, tap subscribe. We're building a calm, long-game community, Munger style. No hype, just clarity, ownership, and compounding conviction.